All right, folks, welcome to a weekly market recap. This week was a break even, and we're going to be talking about the lessons. What happened during this week? What did we miss? What did we do wrong? What did we do right? What can we learn from this week? And what can we take from this week on forward, internally improve our skill set and mindset in every aspect of our life? So this week was actually very important. Monday, I had no setup. Tuesday, no setup. After on Wednesdays when we had starting having some setups, we had a shorting opportunity, which it hit my take profit, but I didn't get out. I thought it would go down lower. But on a daily time frame, it clearly showed us a breakthrough. So we should have definitely gotten out after the 50% mark of the range that was traded, meaning since the CRT can either be broken through or falsely broken and respected, which basically means since this candle was showing us signs of a breakthrough, we cannot take a short all the way down. We just have to target the 50% mark of the range that was traded during that Pacific day. Now, I set that rule to a Pacific week, but I was looking into it, was like, man, market is not going to retrace all the way to the percent mark of the traded. He's not gonna retrace it at 50% mark of the weekly range during the Pacific week. It's just going to do a daily range, right? But that daily is that rule is primarily for the daily time frame, right? So it's highly gonna do that because the weekly, if it were to do the weekly, it was going to show signs of you know respect, right? Because you have to be all the way down here. So he definitely did not show any signs of respect. He showed more signs of disrespect rather than respect. So it's targeting that 50% mark of the range that was traded during the Pacific day is a better goal and better target. And with that, we could also target the 50% mark of the 4-hour CRT. And that's what I learned after Friday. And I was looking at the market. I was like, I had multiple setups that offered me like that. So okay, cool. I may also take that because I have two setups, no more than two that was 50% mark range trading, and I always say that you will usually tap the 50% mark of the 4 CRT, and sometimes it does not tap the 4 CRT low or 4 CRT high, just the 50% mark. Now this week, Monday, Tuesday, I didn't take a trade. Wednesday, as I said, we had action. But we should have not taken any setups until Friday, right? Because Friday is when we tap the order block. As you guys know, whenever there's a daily order block above a daily CRT, we do not take any trade until the daily order block is tapped because the reasoning is because it's a way to avoid lower time for manipulation because we can have setups over here and which we did on Wednesday, which if we were to hold that trade, we're gonna go in loss, right? Which that rule specifically um, does not make us get stuck in the manipulation or get trapped in the manipulation. So when we wait for the order to get tapped, we do not get stuck, right? We can just go and trade off quickly without manipulation being there, right? So when there's a manipulation there, it's going to run through our stop loss, right? So which we don't want. We want to, we want to take that. I must take that setups, right? We do not want to take, anything other than that. We want to take only high quality, which that right there is high quality. But I only knew we were gonna go tap this order block after Wednesday, man. Not be after Wednesday, after Thursday, right? That's what I knew. It was like it didn't make sense to me at first because it's Wednesday candle right over here. It looked like market already closed below it, so you already tapped it, so the kilo of article has emptied on. That's what I was thinking. But during that time when he got tagged, when he had SMT, during that time, the order block never get confirmed. It get confirmed on Monday. And Monday was this big bearish candle. And we felt like, well, it did tap it. It did not tap it. It tapped the other order block. And as you guys know, these type of order block, they somewhat do not, they never get left out, by the way. these order blocks never get left out. So that's why I have this rule specific for that, because I know this type of order block will never get left out because they're time based, and they're CRT ranged, and they're specific highs and lows type of order blocks, right? They're not, your normal ass order block like this, right? And this will be the best example. This and this, it would not be like that. It would be primarily time based with that's all I know. That's all I can say. I mean, that's the only thing you need to know about this order blocks, which I already made the video on yesterday, which will explain it a little bit better. But the main theme of it is for me to avoid lower time frame manipulation. Now I can show you guys another example of it if you guys do want. So right here would be a good example. I had a long opportunity before this daily order get tapped, so I took a long. My stop loss got ran through. It hit the daily order block. Then eventually from there it reversed. So that's why. That's the reasoning why I wait for that daily order block to get tapped or have SMT. So, that's the whole reasoning why I waited for that daily order block to get tapped. And because during that lower time frame, I had an entry model beforehand, so I would have been stopped out. So if I were to wait for the daily order block to get tapped, then trade, then I would have avoided having a lower time frame manipulation, right? I would have avoided getting manipulated in the lower time frame. So now that's what we had. That's only after Thursday. I learned that this week we should have waited till Friday because we have to wait till we had to wait for a deeper pullback, right? We had to wait for a deeper pullback, which was to this order block. Now Friday I didn't have no setup, so Monday, Tuesday no setup, Wednesday I had a setup. Thursday I didn't have no setup because I didn't follow my trading guideline rules. Friday they did not follow my trading guideline rules, so I did not proceed to take any setups. Now let's get straight into it here. I don't know why I have this here. Where did I get this from? Oh, that was from the other phone. Yep. So yeah, going out to lower time frame over here. So on the Thursday setup, you already guys know what I'm bearish here, right? We have a higher time frame, which is the 12-month, right? Which overall wants to go downside. Now the time is aligning with the 12-month time frame. So we're looking for that good shorting on EU and longing on DXY. We also have this, daily, monthly CRT. I mean, we also have a 3-month CRT, and on a monthly time frame, in a monthly time frame, we're in an expansion candle, which is a pretty good sign. On the weekly time frame, we have a weekly CRT downside. On a daily time frame, we're looking for a pop above, which we had right over here. As I said, that was a trade should have not been a trade because we should have waited till Friday because we have to wait for a deeper pullback, right? But we're still gonna analyze it, learn from it. On the 4-hour time frame, we had a 4-hour. This time we took a London session trade instead of in New York. Now, as you guys know, from now on forward, I do trade London. The reason why I trade London is because I've been finding out that I've been missing a lot of setups. Because the reason I'm trading London is for the pre-meeting type of trades, right? What I mean by pre-meeting type of trades is that I sometimes get setups that happen on London, which doesn't happen on New York. I sometimes get setups which happen on New York and doesn't happen on London. And yes, when I take the New York, I'm missing out on the London session, right? So when I take both, guess what? I'm basically pyramiding on my setup. So instead of me making a 12-hour at once, I can make 2 12-hour or 12 and 13 or a 12 and 8. So, but if I lose, I'm losing such a little. If I win, I make them a lot, right? But usually what I see happening, if the London session gives me a setup, New York will not, right? But if New York gives me a setup, London session will not. And also, one more thing I gotta keep in mind, that if I take a London session loss, I'm done for the day, right? One trade a day, regardless of the outcome, regardless if you make a mistake or not. And yeah, now that's our 4 CRT. Lower time frame, I made a lot of mistakes here. I'm a broke even also, as you guys know. We should have not been broke even. I should have actually taken a loss. Although he might take profit, but during that time, my take profit was was the 50% mark of the range that was traded during the Pacific week, which would have been down here. But to me, it didn't make sense. I was like, if it goes down here, it's going to respect the daily CRT, so it doesn't make sense. But I further noticed, I found out that the 50% mark that was trading has to be during that specific day, not the week. And that's what I found out. That's what my target. That's what didn't get out. So I broke even, and eventually got out from the break even trade. But we should have actually taken a loss. The break even is not an option. We should never break even, right? So yeah, that's lesson number one. Other thing we messed up on our entries here. It should have been this, this right over here, this gray line all over here. Oops, I missed the wrong button. But that key level, if I can find it. Yeah, I guess not. Okay. So the key level right over there was our entry model, which is the order block above an old high entry model. Now, how do I mess up my entry model? Although it was clearly what do you call it? Although I clearly had consciousness at that time. The reason I messed up my entry model is because the old high got purged before the time, and I only knew I messed it up after I entered the trade because it was like it's strange to me, because I have never had a time where the old high got purged before the right time. In this case, the old high got purged before the right time, and our entry model get tapped at the right time, but the old high, the liquidity pool, got purged at the wrong time. So I was like, oh yeah, that looks a little bad sign there. Market went down. I was like, oh, maybe not. Went back up. Boom. I was like, okay, cool. It's definitely going to. I'm definitely messing up on that on my entry model. But it's going to the other key level entry models, right? Which is overall trying to go to the order block of an old high. That's a fair value gaps or overall near it, and the fair value gap is paired with the order block. Now the order block, there's multiple fair value gaps, right? Like so. In this case, we still take the order block because it's still near the order block, and just they're relatively still paired, and because what else? They're still in the same price leg, right? One important thing. Now I knew I messed up after I entered my trade. I was like, the old high got purged at the wrong time. The pre-manipulation liquidity pool got purged out at the wrong time. He got purged out at 245. I was like, yep, there's something wrong. Market eventually tapped, it went down, made another old high, pushed out the old high, tapped the other key level. But when he went up high, pushed out the old high, tapped the other key level, then eventually we this fair value gap. We cannot enter it. We can't enter it, right? But we're gonna have less RR. But the problem is gonna be with that is that we can't still enter that. We still can't enter that because there's an order block near it, and there's an order block on the same price leg that has not been tapped, that has pressed out liquidity, and is paired with the order block. The fair value is paired with the order block, so we only wait for the order block to get tapped. Then we're looking for reversal. And eventually the order block got tapped, which is that gray one, and eventually then reversed. Eventually our old high on that order block was this high right over here, tapped it, or it could be this scanner right over here, but they were both, regardless, tapped it, then eventually reversed within 2 candles max. So has to happen within 2 candles. Tapped it, reversed fully, and you can see I did not get stopped out. It was very close to my stop loss, and that's what if I were to put my stop loss right in the where the red line is, I would have been stopped out, right? But as you guys know, we always increase our stop loss by 1.5 pips just to cover spread, right? In this case, he didn't just cover spread; he covered spread and a loss. And although we didn't make any money from it, we should have made money from it, but we didn't have the loans there at that time, so we just learned from it. So what happened eventually when the market went down our way in our direction, I was like, man, I can't accept this 2.5 RR because my setup because I reached the 0.50% mark, I had 1.5% because it was 3 RR, right? To me, it went 3 RR, you went to 1.5K funded account. Eventually, I was like, man, it should be definitely going down lower. You look like, to me, it's at first seemed a little wrong because I was like, right. I mean, it's not showing me strength. It's not showing me very strong signs, right? I'm like, we are constantly retracing back to it. The right time happened on this push to the downside. I was like, this big pullback taught me. I knew, okay, market is reflecting out of the 50th mark of the CRT. It's gonna be highly likely reversal, and I knew like, okay, I messed up multiple here, and I was kind of emotionally straight because messed up on my entry model first. Second, my target was way off. So I was like, man, just break even. I'm gonna put my stop loss here. Here's my stop loss. I make nothing, but also missed out on money, right? Which is not good. As we should only be interested in making money. These low trades like this, to me, the reason why I didn't get out was because I thought, okay, 1.5K is not that much, which that means I'm greedy, right? Now I also added a rule like can't be greedy, right? So that's the second lesson. I cannot be greedy, right? I was reading at the time. I was like, 1.5K is not that much. Let me hold it. Eventually, I forgot. I knew like, yeah, I broke my trading calendar rules. Now I'm going based on emotion. I'm not even going based on the market anymore. Because my rule told me what this because we're like where the market right here. It looks like on a daily time frame is showing us signs that it wants to reverse from the daily CRT, but we don't care about where the price is at. We care about where our entry model is at. When we entered, is it way past the daily CRT? Okay, then you start getting 50% mark. But during that time, I thought, okay, we're just gonna still hold it because still now showing us respect sign. Now it's showing us some respecting signs, but I forgot the rule that doesn't matter. What matters is where our entry happened. That's when it matters, right? So I messed up my rule. I just went against my rule, which I broke my rule. It will never happen again. I'll never let this, mistakes happen again. So that's what happened. And eventually it reversed in my break even, and yeah. So what are the lessons from the trade? The lesson from the trades are to have the right time manipulation, right? So the old high and the key level both must get souped at the right time and get tapped at the right time, right? The old high must get souped on lunch between 3 a.m. to 5 a.m. and for New York 6 a.m. to 10:30 a.m. Right? It cannot get souped before during those specific times. If it does, then I just wait for another old high to get formed. Then I look for a pre-managed liquidity pool and tap the key level. So if I do get a setup where the old high gets pressed before the key level gets tapped, before the right time, and it taps our key level at the right time, I'm not going to enter the trade. I'm going to wait for the old high and the key level to both get tapped at the right time, because as you guys know, the market, you want everything to align in order for it to be a good setup, in order for it to be even considered a setup, right? For it even to be considered a high quality setup. Now the second lesson is that whenever there's a fair value gap and order block paired, or the fair value gap is relatively near the order block entry model, I'm going to enter the order block. And sometimes when I get more advanced, once I have more knowledge about how this entry model goes, when the fair value gap entry model and the order block entry model are in the same price leg, so this is basically the same price leg. Now this right over here, if you go to down here, this different price leg is not the same price leg as this one right over here. Two different price leg, right? So when the fair value gap and the order block are the same or within the same price leg, I'm going to enter in the order block, right, to get more RR. Because order blocks, you guys know, are one of the best total sweep entry models. So this right here, to me, the only reason why I didn't get out was like 1.5, like 3 RR is not that much, right? All the way is 2.8 because I was down here, right? To me, it was like 2.8 RR is not that much to me. I'm gonna keep on holding. What happened, right? Which we don't want, because our actual entry model should have been here, right? It should have been way more than 3 RR, right? Should have actually been. Let's add 1.5 stop loss. Add the extra 5. That's what? A 6.3 RR, right? Same target, 6.1 RR, or it's a 6 RR trade. So you see how the order block entry models are the best entry models you can ever have. So yeah, that's the next lesson. The next lesson is I'll never break even again, regardless if I make a mistake or not. Regardless if I even if I broke my trading guide rules, I will never break even. I'll take the loss. If I break even, then it's over leveraging, or I did something wrong. Which even if there's something wrong, I'll never break even. Or I should have not taken the trade at first place. So from now move on forward, I'll never break even. And the next lesson is I will fix my trading guide. I'll fix my my entering entry method better, or my entering model, I'll make it way better, right? And next lesson is that when the market's way past the daily CRT range, I'm going to target the 50% mark of the rate that was traded in the Pacific day and not the week, because it only applies to the Pacific day. Now, when a trade that happens like that, what else we're gonna do is that if we're using a 4-hour CRT or 1 hour CRT is always gonna be a 4-hour CRT. When we're using the 4-hour CRT, I'm also going to target the 4-hour CRT 50% mark of the 4-hour CRT. Usually they both align together, which the daily range and the 4-hour CRT 50% mark, they always align together for some reason, which is I'm gonna target that also. So this will give me a chance to target 50% mark instead of the CRT high or CRT low, and this could be a quick total two trades. So yeah, that's the next lesson. So from now on forward, I'm going to target when the market is way past the CRT range on a daily time frame, I'm going to target the 50% mark there of the range that was trading there the Pacific day, and the CRT on the 4-hour time frame, 50% mark of the 4-hour CRT. Now, my final target will depend on where in the Pacific type of scenario. It will depend on where the daily range 50% mark is in the Pacific day, and the 50% mark of the 4-hour CRT. Usually always be the 4-hour 50% mark. It's usually always below the daily CRT range. So yeah, it's the next lesson. Now after that, Wednesday, I did have another setup. I didn't have a setup, but the market never followed my trading guidelines, so I was like, I'm not gonna take any trade here. He didn't give me a setup though. He didn't give me a setup, but he didn't get tapped at the right time. He got tapped at 12 p.m. As you guys know, right when it hits 12 p.m., we're done for the day. We're not looking for any trade up. We're done for the day. And yeah, on Friday, he tapped my key level. Eventually, Friday, I was like, oh shit. He tapped the auto block. And he showed a clean sound reverse. I was like, yep, I messed it up. I messed up on, so the trade should have not been the trade at all, but I messed up, but I still take the trade. But as you guys know, although there's a lesson to be learned, although we should have not traded that day, the lesson still applies to every single other trade we take, right? So yeah, that's the lesson. So from now on forward, the next lesson is that I must, on a daily time frame, when I'm making my analysis, I must always pay attention to daily ranges and these type of order blocks, because they never get left out. They always get retraded to. The ranges always get retested, right? There's a specific range, which is time-based range and time-based order block. And the next lesson is that I will always look for these on a daily time frame. When on a daily time, I'm looking for a pop above down below. I'm also looking for daily range. I'm also looking for this to avoid buying too early or selling too early, right? So we can wait for a deeper pullback. This Friday should have been the only day that we should have traded. But yeah, after that, is there any lesson other than that? Any other lesson than that? No. But yeah, that's a beautiful lesson. Beautiful week. Love it. But yeah, I hope you guys like it. If you guys like, comment, subscribe, share. We'll never make this mistake again. We will never, ever, ever make the same mistake again. We're going to be always wise and always smart and always logical. Because during that time, I said before, the reason why this auto block that it had SMT, because on DXY, it never confirmed. As you guys know, we always trust DXY more than EU. We always prioritize DXY over EU. We should only be trading DXY. We should only be analyzing EXY and trading EU. But I don't do that because I know, okay, I do have to pay attention to DXY more than EU. But if that keeps on going on, I will have to just trade, analyze DXY and trade EU, right? Which when I get to that point, because I've never been the same mistake again, I'm always wise. And yeah, on the daily chart, I will on a charting basis, I always trust DXY more than EU, right? I'll never make the same mistake again. But yeah, make sure you guys join the Telegram link in the description below, and I'll see you guys inside the Telegram. Peace out.